You were listening to chartingwealth.com for Friday, the 2nd of October, 2015. We are looking at the total market. That is what IYY represents. It is all of the stocks in the stock market and how they are moving in a big wave. And what we see happening, possibly, is this big wave that had been going down for 8 prior days to the last 2 days could be slowing down in its descent. We do not have a crossover going up yet on our MACD, the moving average convergence divergence. It is still in a down move, but it does appear to be converging, but it has not crossed yet. So we are still in a long-term chart down move on the 2-day chart. If we revert back to the 4-hour chart, we can see that for the last 2 days, the charts have been moving up. It crossed over into the afternoon going up on the 1st of October, Thursday. It was up technically 0.06%, so that's a little over half of 1%. Not a lot, but up for the day on the whole, as it was yesterday. So we'll just have to see, but we're a little bit schizophrenic here. The short chart is up, the large chart is down. Now, where do we find a trade? Well, if the short chart rolls back over and the large chart is still going down, that's the safest time to get into a virtual trade. We'll talk more about that as we look at SPY. SPY is the Standard & Poor 500. Let's see that in the 2-day view. Those of you listening by audio, I'll explain to you what we're seeing. We're seeing a green candle for the last 2 days. There was a crossover going down around the 25th. That candle crossed over on the moving average convergence divergence. We still have a negative downward move in the market. The derivative oscillator is also rolled over. However, it does appear that the MACD and the signal line are getting closer together. Again, if you want to know what the MACD is, please go to our website, chartingwealth.com, study about it, read about it, listen to our videos on it. You can also look it up at places like Investopedia or just Google it. Moving average convergence divergence on the left side of our screen. It is the MACD. Now, it is a wonderful indicator that we use all the time. We could use a plethora of indicators. We have honed it down to the right signals that we are looking for, and we've tried to make it as simple as possible because with simplicity comes knowledge and ease, and we want to do everything that we can to make what we do as easy as possible. You can get so many different indicators that you can literally end up not knowing what to do, and we do not want to be there. So we see that we're in a confirmed down move on the big chart. The short chart, just like the total market, crossed over going up. Actually happened in the morning today. That is Thursday, the 1st of October. For the day, the S&P 500 was up about 0.25%, so not a lot. But if we look at the 4-day candle, the four half-day candles, which represent 2 days, we're up over the last 2 days. Now, it's yet to see whether that's going to be sustained, but again, if it is not sustained and rolls back over, that is the time to get into a virtual trade. Now, when we say virtual trade, we don't give trading information for anyone to make real money trades because we are not a stock calling service. We offer this information for free. This is an educational service. All we do is tell you what we see. So what we would recommend if the market rolled back over, you might want to look at getting into an inverse fund. That is a fund that makes money when the S&P 500 goes down. We don't have that confirmed yet, but that's something to look for. Now, let's go to our last index, and that is the Qs. What is the Qs? Well, the Qs is actually the NASDAQ 100. That is what it represents. So we're talking about technology stocks. And we can see when we look at the Qs, it also had been going down for the 4 prior days to the last 2-day candle, crossed over going down on the 25th. It is still going down. We're still in a confirmed down move on the big chart. When we look at the short chart, the half-day 4-hour chart, it actually has been going up on all of the candles for the last 2 days. So we have 4 of those. Also, derivative oscillator crossed over going up, and we almost have a crossing over going up on the MACD, that is on the 4-hour chart. So we'll continue to watch, see if that's sustained, and then see if that actually turns around all of the rest of the market. Not done that yet, but we'll continue to watch. Now, we did draw our trend line. We don't typically draw a trend line on the half-day chart. I did here just for kicks because it was such a nice clean down movement. That, of course, has been broken. If you were doing shorter chart trading, which we don't do, that might be a signal for you to do something like get into an up move, but not for us. We use bigger charts. Bigger charts mean bigger money. Now, lastly, we're going to range back out to the 2-day chart, and we're going to look at gold, which was down today, 0.12%. So again, a little over 0.1%. Not a big down move, but down. Now we can see that gold crossed over going up on the 2-day chart back around the 15th of September, but we really don't care about the 2-day chart so much, do we? No, because our chart for gold that has continued to be good to us is our 4-hour chart. It crossed over going down back around between the 28th and 29th. And what we see happening actually the morning of the 29th of September, and we have seen some nice clean down moves. It's still in a down move, although it could be making a floor here. Whenever we see the market continue to hit one certain point, even though it might not close at that, but if it keeps staying around a certain point, we might be getting a floor around 106.69. 106.50, something like that. If you see that continue to be sustained, pay attention to that. That may be a floor, may be a good buy-in point for the market to roll over and go back up, but we're not seeing that happen yet on our MACD. And if you look back at the MACD, how accurate it has been when you've seen a crossing over. We saw that back on the 25th of August. Going down, we saw a crossover going up back on the 16th of September, and we saw a crossover going down on the 29th of September. So if you were getting in and getting out when the market appeared to top, looking at your candlesticks, you could, and your indicators, you could have done quite well in gold over the last several months. Again, in your virtual trades. And you might say, wait a minute, the market's going down. How can I make money in gold when the market goes down? There are inverse gold funds. There are inverse funds in all of the different charts that we look at, which means you can make money when the market goes up, and you can get out, wait for it to drop, and get back in later. That is buy low, sell high. You can also buy low, sell high, then buy again at a high, and make money as the market drops if you're in an inverse fund. So there are a number of ways to make money in the market for sophisticated folks who really can read a chart and understand just what's going on. You want to learn more about that? Follow us at chartingwealth.com. Go to our website, sign up. You can go through all of our training there. We've got just a great site with lots of good information, and sign up for our daily newsletter, which is this chart review. Plus, you'll get our weekly Charting Wealth review and forecast. Thanks so much for listening to us. We appreciate you being with us at chartingwealth.com.